Hey guys, Forex Last from BK Forex. Welcome to our Forex Daily Technicals for 5/6/13. Euro dollar bullish. It's an open question right now. Trading foreign exchange on margin carries a high level risk whenever suitable for all investors. So I invite you to read the disclaimer very carefully to understand all of the risks associated with trading foreign exchange on margin. Well, the reason why I posed the question as to Euro bullish was because despite the very sharp sell-offs, both Thursday and Friday, um, we were able to hold the 30.50 level. And more importantly, the Friday hold was actually quite bullish because we tested 30.50 and came right back up. And now, as we're opening up Asia trade right now, even though it's relatively low liquidity because Tokyo is off, we are inching our way towards the 31.50. Now, on a broader scale, Euro still very much remains contained in this 30-32 range. And whether it's going to take out the 32s is certainly an open question. But the fact that we have this series of higher lows right over here, continuous series of higher lows. Basically, every time we're coming down, we're stopping at a higher point, is a mildly bullish sign for the euro. And it looks like we're starting to crawl up a little bit higher. The takeout of today of yesterday's highs or Friday's highs really opens up the way for a run towards the 32s later today. And then of course a break of the 32s really opens up this whole 32.50 zone, which kind of acted as a rejection zone several times. 32, 32.50 right over here has been a big rejection zone for a while. If you're looking at dailies here, what you see is again, consolidation within a range here and a break through this range. The 32.50 break really opens up a run towards 33s and really almost all the way up to 35, which is the next serious point of resistance. So despite everything that's been thrown at the euro, technically the pair remains in a counter trend uptrend. Basically, this was the long downtrend. This is now a range with a mildly bullish bias for the time being. However, if we break down below 30.50, a lot of this bullish bias certainly goes away. If we take out the 32s, 32.25s, the bullish bias becomes much more firm as we go higher. So that's kind of how the euro is shaping up for the day and for a longer term basis. I thought it was kind of interesting because it's very counterintuitive to what everything else in the marketplace, all the conventional wisdom in the marketplace. The yen had a nice bounce on Friday, but still remains contained. And this is one of the more worrying things to the bulls. If you are looking for the run towards the 100, we really need to see 99.50. We really need to see in 99.50 100 corridor come in order for the 100 level to be seriously mounted. And the fact that we're kind of starting to fail again here, even though today is really not a great day to test because we have Tokyo closed. But if we go into Europe, and this really doesn't have any further traction to the upside, and we start to slide back down, the very worrisome sign here is if we slide back down and give the 98.50, that would be yet another distribution, and a distribution here could be a nail in the coffin because it would really mark a lower high, continuous lower high that you have over here, and it would be a real break of bulls' hearts. So we need to be watching this very carefully. For now, we're kind of holding. Yen remains in a relatively bullish pattern. We do need to take out 99.50 in order to really reestablish a much more bullish bias and have a reasonable chance to take out the 100 in the next couple of days. Aussie is floating around the 103 level. We did come back. We did find a very strong bottom of this 102.25. This is a nice double bottom here. Big burst up to the 103s. But as I've been mentioning, 103.50 still remains a very difficult area for the pair to overcome. A lot of resistance here. So even if it does have a modestly bullish bias, this 103.50 is really going to be the tough area for the trade to happen. Generally, the 103.75, 103.80 takeout would really open up a much stronger upward move. But until then, you may have a mild move up to the 103.50, but it probably is sell at that point as it becomes a big resistance level. Lastly, cable has actually been acting quite well. Cable, similarly to euro, bounced down to 5,500, basically just below 5,500, came right back up, and now is really looking very strong as the Asian session opens up. We're testing the near-term highs here at 56. Break of 56 through the 56s opens up a run towards the 57s on the dailies, and really and a takeout of the 57s right over here on the dailies, and really puts us back into the trade of back 57 to the 59 channel, which would be very, very bullish. So of all the pairs right now, cable looks on a relative strength basis the strongest, which actually, by the way, brings up two interesting ideas. Pound yen made a monthly high on Friday, and looks like it's it may continue its way. The 54.50 level got taken out, and if we take out the highs here, as a matter of fact, I don't think it was even a monthly high. I think it was a year-to-date high. That's what it was. It was a 3-month high, year-to-date high. So fresh yearly highs for pound yen, always very, very important to note, which means we could have 155 in view as we go, as pound strength goes up through the rest of the week and the day. And lastly, euro pound, on a relative strength basis, we're talking about the fact that the pound is stronger. Now, there's a lot of support here at 8400, but a break of the 8400 really opens up a run all the way down to 83s. So either a very, very strong move by the pound or another failure by the euro could really open up this very, very key break. So two crosses, very much worth watching here. The euro pound to the downside, pound yen to the upside, all based upon pound strength. This is Boris Schlossberg wishing you guys the best of luck and the best of trading this week, and obviously today. And I'll see you guys, as always, in our BK room. As always, please read the disclaimer and understand that trading foreign exchange on margin carries a high level risk, may not be suitable for all investors, and that past performance is not indicative of future results. Wishing you guys the best of luck and the best of trading. Over and out.